Hi there. I hope you're having a great day. I was going to share some information about a type of loan that we are doing a lot of lately. Combination loan or an 80-10-10, 80-15-5, other terms for them. One quick note, I haven't been kind of out of action lately, haven't done many videos, so I hope to get back doing more videos, educational moments. And the reason is I had my rotator cuff operated on finally after 10 months of trying to live with it. What better time than COVID to get your repairs done? So let's jump into talking about an 80-10-10. Some quick tip or points on it. Okay, advantages of an 80-10-10. So you can finance a home with less than 20% down with no mortgage insurance. Usually there's mortgage insurance with less than 20% down. You have an option to waive escrow, so no insurance, no tax as part of your payment. Of course, you still have to pay that outside the mortgage. You can be aggressive about paying off the loan because part of your loan is a first loan, part of your loan is a second loan, or part of your financing is a second loan. That second loan is a little smaller, and people can be aggressive about paying that off over time, leaving you with a lower payment first mortgage. And this is really the best option for higher sales price, for minimum down on higher sales prices. We've done a handful of these lately. It just seems like it's the thing to do. With sales prices 700 to $1,500,000, 2,000,000. It's really a great way to do minimum down payment on those purchase prices. So let's talk a little bit about it. Other combinations of these instead of 80-10-10, 75-15-10, any combination that actually adds up to 100, you could do as long as the last number is 10% or 5%. Okay, I'm going to hide that. I'm going to come back here. And I'm going to minimize myself. There we go. Okay, so this little bar chart here is kind of represents the 100% of the sales price. So the yellow would be the first mortgage, or 80% of the sales price is this yellow bar. A second mortgage is the green bar, so 10% of the sales price. So the combination of the first and the second total 90, and then a 10% down payment from the buyer is the blue thing there. So the rates roughly, so we'll go jumbo rates. We're around 3 3/8 today. Second liens are usually a little higher interest rate. They're not a first lien mortgage. There's a little more risk to them, so they price up for that. So roughly 5%. Also, they're usually amortized over, well, mostly they're amortized over 15 years. Sometimes there's a 30-year second mortgage, but usually they have a payoff in 15 years. So that's the second lien. Let's do this on a sales price of $750. So you've got a $600,000 first mortgage, a $75,000 second mortgage, $75,000 down. Payment on your first is $2,600, second is $400, and there you are with your total payment a little over $3,000 on a $75,000 or $750,000 purchase price. Now here's some. I've done a $1.4 million here recently. So and actually they got a little bit better rate on the first. Rates change daily. These are just examples. But for $1.4 million, mortgage payment totaling $5,600 with 10% down, $140,000 down. That's a pretty nice deal if you're buying in that price range. So again, to summarize, a great way to buy higher priced homes with less money down. You have 2 loans, you have 2 liens, 2 sets of documents at closing. We coordinate both for you, of course, and 2 monthly payments. And you can be aggressive about paying that second one off. There's no prepayment penalty. You can waive escrows. It's really a great way to have the best way to finance higher sales price homes. If I can answer any questions for you, or if you have any questions mortgage related or 80-10-10 related, put your comments in the comment section below. Remember to like or share. I never say that at the first. I should say that at the first, shouldn't I? Anyway, let me know if I can help you. Have a great day. Stop recording.